Hey everybody, I never thought I'd say this, but I'm moving assets out of my Roth IRA at Vanguard and into a Roth IRA at tastyworks. Before we get into that, I want to remind you to subscribe to this channel. Here at Duke of Early Retirement, we're talking about saving, investing, and early retirement. So please go ahead and subscribe. I am a big fan of index funds. In my Roth IRA, I have all the money invested in exactly one ETF, and that's Vanguard's Total Stock Market Index Fund. It's all the US companies in there. The ticker symbol is VTI. You may also know it in its mutual fund form, VTSAX, but I happen to own the ETF version in my Roth IRA. So the entire Roth IRA is sitting there in Vanguard, invested in VTI. And you know what? That's how I want it. No complaints. It's done great for me. But yesterday I had an idea. I put on my thinking cap and thought, what if I could still invest in a broad market, low cost index fund, but make a little bit more, bring down my cost basis on those shares. So here's what I'm doing. I'm transferring a chunk of my assets from my Roth IRA and Vanguard over to another brokerage. I'm transferring them to tastyworks. tastyworks is a brokerage that really specializes in options trading. I became aware of tastyworks as I got into options last year, and I've been using Robinhood so far to trade options, but I've always been kind of curious about what it might be like to move over to tastyworks. The fees there are low, but the interface is much more, I won't say easy to use, but maybe more powerful, more fun, more geared towards serious, active, frequent traders. Nothing wrong with Robinhood though. I've actually liked it quite a bit. But one thing is that Robinhood does not offer a Roth IRA option as of yet. And I want to do this new strategy in a Roth IRA. And I've also opened up an individual taxable brokerage account at tastyworks too. And my plan is probably sometime later this year to move from Robinhood, move that account over to tastyworks too. That way all my options trading is in one account. Well, here's the plan. The plan is to buy SPY. It's another ETF. This is for the S&P 500, the S&P 500 index fund that has options that are heavily traded. They're super liquid. There's expiration dates every single day. I expect the performance of SPY to be almost identical to the performance of VTI. And so from that perspective, there's really no change. Slight increase in expense ratio, which I think will be more than offset by the premium I receive from selling covered calls. So the plan is to hold 100 shares of SPY, that's the S&P 500 index fund, and then sell out of the money covered calls against that. I'm gonna sell covered calls short-term expiration, so maybe a week out. The reason I'll go short-term is that gives me a lot of options. So in case SPY rises in value, I can roll my calls up and out and keep them out of being in the money. Price of SPY goes up. Uh-oh. Well, all I'm gonna do in that case is roll my covered call up and out away from the strike price. There's a little bit of a cat and mouse game. As SPY increases in value, that's okay. My covered calls will just keep them getting out of the way, and then hopefully I can capture as much gain as possible as SPY goes up. The price of SPY stays where it is, covered call expires worthless, great, perfect. Now if the market falls and SPY shares drop in value, hey, this strategy is fantastic for that. Price of SPY goes down, covered call expires worthless, fantastic. My covered calls are just gonna soften that blow, lower the cost basis of my SPY shares, juice the returns a little bit, however you wanna look at it. I'll also be capturing the dividend along the way. So as long as I don't have to sell my shares of SPY during the X dividend date, I should get that dividend as well. And I'll just plow that dividend over into my VTI investment and keep growing that. So I'm gonna be growing that VTI position in my tastyworks Roth IRA just alongside holding the shares of SPY and selling covered calls against those. What am I gonna do with the gains, with the extra profits from selling the covered calls? Well, I'm gonna buy VTI, good old Vanguard Total Stock Market Index Fund, just like I did in my Vanguard Roth IRA. There's no fees to buy and sell. I'll still get the low 0.04 expense ratio. So I feel like this really doesn't change my strategy much at all. I'm still going to be invested in an index fund with a low expense ratio. SPY's expense ratio is 0.10 versus VTI, which is 0.04. But that's not a big deal because I'm going to be selling covered calls and just bringing in the money, baby. Extra profit every week, every month. I'm very excited about this strategy. And I figure if I can make, say, $500 a month selling covered calls, in 12 months, that's another $6,000. You know that the contribution limit right now for IRAs, for Roth IRA, is $6,000. So if I can generate another $6,000 selling covered calls over the course of 12 months, it's kind of like doubling my IRA contributions. The thing about holding VTI, the ETF, in Vanguard, there's no advantage to that. I mean, Vanguard doesn't charge a commission to buy and sell it, and then you just pay their expense ratio. You know what? It's gonna be the same situation at tastyworks. I'm gonna hold VTI, I'm gonna have that low expense ratio, I'm not gonna pay any money to get into the trade, I'm just gonna buy and hold, just like I did at Vanguard. The only advantage to holding a Vanguard fund at Vanguard is if you have an actual mutual fund, like VTSAX, you really wouldn't be able to own that at a brokerage like tastyworks. But the ETF version is cheaper anyway. Now, I'm not shutting down my Roth IRA at Vanguard completely. I'm only transferring enough assets out of there so that I can buy 100 shares of SPY and start running this covered call strategy. And who knows, maybe in the future I will end up transferring the rest. I just feel like it makes sense to keep a Vanguard Roth IRA open just in case. You know what? Sometimes I change my mind. So I'd like to have that there just in case. So I'll keep a chunk of money there, still invested in VTI over at Vanguard. I've got other accounts there already, so that makes sense. Part of me likes to keep things simple and not have too many accounts all over the place, but how can you say no to getting more money into a Roth IRA? I feel like I'm not betraying my index fund ideals. You know, I believe you shouldn't time the market. I believe in buying the total US market and just letting it ride, buy and hold, keep fees low, don't mess with it. So I'm a huge fan of Vanguard. I mean, they're at the vanguard, if you will, of low fee index investing, and it's the place to be if that's your style. I still have accounts there. I have no intention of leaving Vanguard. It's just that I'm really excited about this kind of extra strategy here on the side, this different strategy to possibly make even more, get more money into my Roth IRA. And of course, I'll let you know how it goes. I'm gonna have future videos on this that gets into more of the specifics of like the how, and especially once my assets do transfer over to tastyworks. I'll kind of show you what that looks like and show you how I'm gonna buy 100 shares of SPY and then start selling covered calls against that. This isn't a strategy that I just made up out of the blue. It is a known strategy, common as far as I understand. In the world of options trading, this is considered actually a conservative strategy, maybe one of the most conservative strategies. It's simply holding a position, holding stock that you might hold anyway, right? It's just an S&P 500 index fund, and at the same time selling covered calls against that to generate a little extra and bring down the cost basis. The other thing is because it's in a Roth IRA, options don't really have any favorable tax treatment. They're just taxed as ordinary income. So by doing all this in a Roth IRA, it shelters me from having to pay taxes or even worrying about all these covered call trades that I'm going to be doing. So that's the plan. It's still fundamentally just buying and holding index funds. It's just got a little extra exciting options flavoring on top of that I hope will juice my returns. And you know what? If it works, I'll let you know. If it doesn't work, I'll let you know. I'm really excited about this strategy. Let me know your thoughts. Does this sound like a reasonable strategy, or does this sound really... Seems reasonable to me, but you know what? It's one of these things where I kind of have to do it to see if it works out. All right, so that's the plan. Thank you so much for watching. Remember, comment, like, subscribe to this channel. I appreciate you being here. Have a great day. Hey everybody. All right, that's good enough.